every YouTuber in Vancouver is arguing about the crash, something else is happening. Something bigger than the crash, bigger than the bailout, bigger than the rate cuts, the biggest financial event in Canadian history. It's about to slam directly into Vancouver real estate. $1 trillion. Not a prediction, not a headline, an actual dollar figure that has been in bank reports and government forecasts for years. The wealthiest generation in Canadian history is about to hand its money to the next generation, and a huge chunk of it is going to land right here in Vancouver housing. While everyone is watching the crash, a lot of people with money are watching this. My name is Dan J. Riley. I'm a realtor in the Greater Vancouver area under eXp Realty. I track this market every single day. I read the wealth transfer research. I read the Bank of Canada notes on first-time buyers. I sit across the kitchen table from parents writing the down payment checks. And what I'm about to walk you through is a data story. It's not a prediction. It's not a guarantee. Just what the numbers are saying about the demand wave that's already forming. Canadian baby boomers, born between 1946 and 1965. Right now, they're the wealthiest generation in Canadian history. They own most of the real estate, most of the stock portfolios, most of the retirement accounts, most of the family businesses. CIBC Economics published a report in 2016. They estimated that $750 billion of wealth would transfer from boomers to their children over the following decade. The study is considered low. Every updated projection is higher. IG Wealth Management projects the number at over $1 trillion. Some sources go as high as $1.5 trillion. Read that again. $1 trillion, passing from one generation onto the next inside of Canada. That is the biggest wealth transfer in this country's history, and it's already happening. Not a lot of people are talking about. Boomer wealth in Canada isn't spread evenly. British Columbia, home to Metro Vancouver, has one of the highest concentrations of boomer wealth per capita in the entire country. Statistics Canada data confirms it. BC boomers own hundreds of billions of dollars of residential real estate. They bought detached homes in the 1980s and the 1990s for under $300,000, and those same homes are worth over $2 million, sometimes over $3 million. And that's not paper wealth, that's actual equity that is about to be liquidated or handed down or borrowed against. Whichever way it moves, it flows back into the housing market, not out of it. Now here's the piece that nobody puts together. The wealth transfer is not something coming in 2030. It's not something you want to wait for. It is happening right now. CIBC Economics published a study in 2024. Nearly 1 in 3 first-time homebuyers in Canada received financial help from family for their down payment. The average gift was over $150,000. In Vancouver specifically, the number is way higher. I've seen family gifts of $200,000, $300,000, $400,000, $500,000 regularly. Bank of Canada called it the bank of mom and dad. It is one of the biggest single sources of new capital hitting Canadian real estate right now. That is the first wave of the wealth transfer. Boomers who are still alive, still working, still healthy, just handed money over early to help their kids buy. This is happening every week in Metro Vancouver. We see it on a ton of deals. Then there's a second wave. Inheritance. The oldest boomers are in their late 70s and early 90s. The wealth is starting to move by natural life expectancy. Statistics Canada tracks real estate transfers. The number of estates being processed in BC has been rising steadily. Financial advisors call the next 15 years the wealth transfer decade, because the mass majority of that $1 trillion is going to move between roughly 2040. Some of it's going to go into investments, some of it will pay off debt, some of it will fund lifestyle, but a huge chunk of it, historically 40 to 60%, ends up going into real estate, either as a down payment or paying off a mortgage, or as a straight cash purchase. That is the second wave, and it's starting to arrive. I already covered on this channel the construction cliff. BC housing starts are down over 40%. Condo starts down almost 60%. Supply is dying up. At the same time, this wealth transfer wave is arriving. Do you see the setup? Supply falling. Demand might surge from money that already exists, sitting in bank accounts, sitting in home equity, waiting to move. That is the exact opposite of a crash formula. That is a compression setup. When supply drops and demand rises, prices don't stay flat. They can snap, not immediately, not tomorrow, but over the next 2 to 5 years. The pressure builds and then it releases. And I'm going to add in a layer that some people are missing. The wealth transfer does not spread evenly across Metro Vancouver. It follows patterns. Family patterns, geographic patterns, cultural patterns. The first neighborhoods that see the money hit are the areas where boomer parents already live. Kids inheriting or receiving support tend to stay near family. So places like North Vancouver, West Vancouver, White Rock, Kerrisdale, Point Grey, Kitsilano, the Fraser Valley cities where the boomers retired, those areas see the wealth land first. Then the second wave spreads to family-friendly neighborhoods where the recipient generation raises their kids. Burnaby, New Westminster, Coquitlam, Surrey. Watch those neighborhoods first, They are the leading indicator. Every generation has a wealth transfer moment. The last big one in North America housing was the post-war generation handing off to boomers themselves between roughly 1985 and 2005. That transfer, combined with population growth and interest rate cuts, fueled a 20-year run in real estate. Vancouver detached prices went from under 200,000 to well over $1 million. Not in a straight line, of course. There were dips, there were resets, but the wealth transfer put a floor under prices, then it lifted them up. The current wealth transfer adjusted for population and dollar values is much larger. Not a guess, that is the CIBC math, that is the IG Wealth math, that is the Bank of Canada research. They all agree on the size. The only thing that's uncertain is the timing, but the wave is real. So what can you do with your money when you see this setup? 3 things. Number 1, they're positioning in the quiet phase. Between the current oversupply and the coming demand wave, there is a window, 12 to 24 months. Where the prices are still where they're at now, they buy in that window. Number 2, they are focusing on neighborhoods where the wealth transfer lands first, not the outer cities, the family adjacent, boomer adjacent, transit connected areas. Number 3, they're locking in low rates, not because rates will spike back up anytime soon, but because the low rates plus long amortizations compound better against the coming demand. That is a very common playbook, and you don't need a hedge fund to run it. Just need to understand the setup. If you're a buyer thinking about Vancouver right now, here's the honest math. Prices are down from the 2022 peak. You can find 15 to 20% discounts on very well priced properties, some pockets steeper. The wealth transfer that will rebuild demand is arriving not 5 years from now. It's starting right now. Waiting can have a real cost. If you wait until the demand wave is obvious in the sales stats, the best deals are usually gone, the prices are up. You're competing with every other person who waited. There are a lot of buyers moving right now, and they're getting comps that will not exist in 18 months. I'm not saying you should buy. I'm telling you the compression setup is real, and you have to decide when you want to move along that cycle. If you own, the math does flip. Selling right now means selling into the current oversupply, discounts, days on market, buyer negotiation leverage. If you can hold 24 to 36 months, you'll likely sell into a much stronger market, higher price, faster deal, less friction. I'm not saying hold at all costs. Some people just cannot with the rate reset, maybe a job change, a life event. Those are real. But if you have the financial runway, the math over the next 3 years favors patience, backed by the wealth transfer arithmetic, backed by the supply cliff, backed by the rate cuts already baked in. One more group, parents, boomer parents specifically. If you're thinking about helping your kids get into the Vancouver market, the window between now and the second half of 2027 could be a real opportunity. Prices are compressed, rates are lower than peak, supply is still elevated, your kids can negotiate. If you wait for the demand wave to normalize, your same gift could buy them a lot less house. The bank of mom and dad has never had better leverage than it does in Vancouver right now. So talk to your accountant about how to structure the gift. Talk to your kids about what they can actually qualify for. Talk to your real estate agent about specific opportunities. I do this every week. Every headline in Vancouver right now is about doom. Prices falling, sellers stuck, builders bankrupt, renters leaving. All of it is happening and all of it is real. However, underneath it, the biggest generational wealth transfer in Canadian history is starting to move. $1 trillion sitting in bank accounts and retirement funds and home equity, and it is waiting to change hands. A huge chunk of that money is going to end up back in Vancouver housing because that's where the recipients live. That's where the family is. That is where the values are the highest. People who see the wave coming move in the quiet phase. The people who wait for the crowd to see it in the past have bought at the peak almost every cycle, almost every time. So what do you do next? If you're eyeing a specific Vancouver property, just shoot me a text at 604-288-7592. Send me the address, send me the MLS number. I can pull the comps. I can run the math. I can tell you straight up whether it's a good deal worth chasing. If you want to see the actual best deals on the market, again, just shoot me a text. Every property has been vetted by me personally. Real motivated sellers with real value. If you're a parent looking at helping your kids buy, you can book a one-on-one with me directly. We can go through your exact situation, walk through structuring the gift, picking the neighborhood, and timing the market. 30 minutes, and there's never any pressure. Quick note, this video is a general market commentary. It's not personalized financial or investment advice. For your situation, talk to a licensed professional before you make any move. Thanks for watching, and I'll see you in the next one.